In today's video, I'm going to be sharing with you the 5 wheel strategy setups that I'm eyeing this week. And everybody that comments down below on today's video is also going to get my early retirement strategy guide. So if you want that guide completely for free, just drop a comment down below on today's video and hit that like button and the subscribe button. But guys, do me a big favor also. I have a quick little announcement that I want to make, and I want to reach as many people in our community. So bear with me for just like 30 seconds here. I want to share with you guys something that I've been working on and making sure everything is legit. Is I'm going to be starting to share my account statements on my own website. One of the biggest things that I've found since kind of joining this kind of investing space, trading space, even though I don't consider myself a trader, is there's only literally one other person that I see be very transparent with their trades, meaning that they actually show their account statements, okay, on a month-by-month breakdown. And it's somebody I actually really look up to in this space in terms of how they market and stuff. And I don't want to be looped into the 99% of people that tell you you're going to make $10,000, $20,000, $30,000 a month running the wheel strategy or buying options or scalping. So coming soon, hopefully today, if not this week, if you go to optionsellerschool.com or onlypeterpru.com at the top and the footers, I will start putting my broker statements, and you guys can follow along, right? And now obviously these are not guarantees that you, by following me or anything like that, this is my personal journey that I'm documenting in my own personal results running the wheel strategy on my small portfolio. So real quick, just wanted to make that announcement that I'm excited to be able to share that and continue the transparency that I want to be here on this channel with you guys, okay? So let's go over the shoulder and talk about some of the top wheel strategy stocks that I am paying attention to this week, guys. So first and foremost, some moves have happened here. Some moves have happened. And that first move is going to be Kraft Heinz. Okay. So we all know on Friday, I was assigned Kraft Heinz puts, and on our trade log here you could see I already have listed that as assigned, right? I got my assignment. $2,700 was not given back to me. Instead, I was given 100 shares of Kraft Heinz, right? And I was assigned at $27. If we factor the premium in, okay, it's a little bit lower, but for the sake of simplicity, I just keep it $27. I immediately then did a covered call for $27 as well. The way I like to think through this, guys, is I just consider that $2,700. That it's 100 shares or $2,700. I don't care. It's an asset, and that asset ain't just sitting there. It ain't just sitting on that seat, right? I'm getting that thing working, and I collected actually the same amount of premium right here, which is actually funny on the cash secure put and the covered call side for just about a 2% return in a little over a 30-day period. Obviously not ideal, not the greatest strike price, but guess what? We keeping the premiums rolling in there, and I'm very happy with just about a 2% return in a month. Drop an amen if you're happy with that too. Now, obviously, results vary 100%, guys. Trading involves risk. You guys know that. I again strive to be transparent here with everything that I share here, so you guys have realistic expectations with this strategy. But with that said, if you want my full trade log so you can follow along, make a copy of it so you can use for yourself, check that first link in the description of today's video. You'll also learn more about our Ark Options strategy there. Second stock we got to be paying attention to, guys, is obviously going to be Snapchat, okay? We got a big week for Snapchat because we do have a covered call expiring on Snapchat, an $8 covered call. You guys can see that on our trade log here that we did at the end of last month. We had a nice 2.31% ROI on collateral on that trade for the $8 covered call, and we may be very well taking assignment, meaning our shares are actually going to be sold for $8.50. Our cost basis is around $7.50, under that if you factor in the premium, but I'm perfectly fine with that because that's going to now get me my collateral, right? And I always like to stick to my rules, guys. Like I stress it a lot. Build a foundation based on your rules, your own structures. You guys kind of know my own. If you follow here daily, I know a lot of you do. You know my my rules, my structure, kind of like how I do, especially those in our mastermind and mentorship, right? Is I try to, even when I don't want to, I will stick to my rules sometimes to get my emotion out of it, because the last thing you want to do is be an emotional trader. And that's how I'm thinking through with Snapchat. This thing has taken off like a not like a rocket, but it has shot up pretty fast here from kind of being in this, like, you know, a high 6 and 7 range, and just blew up here. So I'm fine selling those shares. I'm fine with it, okay? And then once it comes back down to reality a little bit, towards that middle Bollinger Band, maybe towards the bottom, I'll be jumping back into some cash secured puts on Snapchat and running the wheel again. But right now, most likely going to be selling. I'm not managing this, guys. I'm not going to roll this position or anything like that. I don't want to. I don't believe Snapchat's going to stay at 8 for long. So for me, I want that. I want to sell it. Like for me, Snapchat's a more shorter term play, guys. I'm not like for example, like I'm not as bullish on Snapchat as I am on like SoFi or something. You feel me, right? So like for example, like Snapchat for me just serves its purpose right now, being able to do the wheel strategy, especially since it's a lot more volatile of a stock, and I'm hitting like a little bit more aggressive targets on the public portfolio here. Next one is American Airlines that we got to be paying attention to. Unfortunately, or fortunately, depends how you want to look at it, took a nosedive here, right? So you already guys know that we have a $12 put expiring October 17th. So not too far away here, right? Coming and looking at our options tracker here, you could see that was one of the trades we made this month, and that was a juiced up premium. One of our juiciest premiums that we've collected so far, even in front of Snapchat, was insane, right? A 3.36% return on our collateral from American Airlines, right? So obviously we locked up $1,200 in order to collect just over $40 in premium. Obviously do the math, that's 3.36%. I do have cushion here if I want to buy to close this position early. At this point, I'm not. I love wheeling and dealing American Airlines, so I have no problem with this. I still think it's honestly a great setup. Do your own research. Obviously, guys on this company, I love running the wheel on American Airlines because it's a cheaper kind of stock, and it's nice to kind of get your feet wet with things. I never would not that I would recommend anyone do anything, right? Go speak to a financial advisor, but for me, like, I wouldn't be like, if I never did the wheel strategy before, I wouldn't dump like 100K and run like SPY weeklies on it just yet, right? Because that could just, again, you don't know what you're doing yet, right? But with that said, we dipped below it. We obviously got to monitor, guys. We got to be paying attention to American Airlines here this week, especially since, if we might have to manage it. Depending if I'm given an opportunity to roll it out, I'll do that. But stay tuned for that. Obviously, guys, make sure to like and follow. I do push updates anytime I do a trade on the live trade log, and you guys will see these updates in here as well if you get this trade log, which will be the first link in the description. Next one I'm paying attention to is a little bit more on the expensive side. Okay, I get it. I know some of you are like, be it, whatever. Usually, we like to see the cheap wheel stocks. Well, guys, oftentimes as your portfolio grows, you're going to diversify out of like not only just doing like 10 contracts of like American Airlines or something, right? So I am watching Amazon pretty heavily here, especially since it's dipped below its bottom Bollinger Band area. Why am I being patient on this one? Well, because I still believe a lot of the stocks that we're seeing right now are very overvalued. I think the entire market is extremely overvalued right now. And I think we are due for, I don't want to say a correction, but a bit of a pullback across the board, okay? Now, who knows if that's going to happen or not, but for me, that's why I'm sticking to the old reliables, guys. That's why I'm being very patient in this market that we're in. The volatility is insane. I mean, we see just every day great companies jumping 5, 10, 15% in either direction, which is just, it's crazy, right? But it's awesome for us option sellers because we get to collect a lot more premium because of that volatility. But with that said, my play, at least what I'm doing with Amazon, is I'm waiting for the dip below at least the 200-day moving average. My ideal cash secured put entry on this would be like the 195s or the 190s with a really, really nice ROI on my collateral there. Since this would obviously wrap up a good amount of collateral, I want to make sure that I'm getting into something that obviously I would really like to. I want to be under 200 in case of assignment. Listen, when I run a cash secured put, guys, I'm already assuming I'm going to be assigned. And I'm not saying you need to think like that, but a lot of you probably should, because some of you get scared when, oh man, I'm going to get assigned. Like, look at my trade log here, guys. There's been multiple times where I've been taking assignment and then selling my shares. I mean, that is part of the wheel strategy. You miss out. Look at this trade I did on SoFi here, right? It jumped me up to just about 20 or almost 24% on this trade, right? Even when I sell the Snapchat, right? I mean, this is going to jump my ROI on my portfolio here drastically, right? It's just part of the game. The appreciation, right? The premiums that we collect on both sides as well. Okay, so for Amazon, at least for me, it needs to drop below that 200 moving average at the very least. So I am paying attention to this one, but it is set up already decently towards that bottom Bollinger Band. for cash secured puts. So obviously go research that. And then another one is Procter and Gamble. Listen, say what you will, guys. I like the boring ones. I like the old reliables. I like the blue chips. I like solid dividends, right? That's just how I like it, right? I think there's enough of the YouTubers out here pushing all the selling puts on SoFi at all-time highs, right? Like that's just not me. You guys know I like getting into that stuff, but I'm patient. I'm doing what listen, I'm like water, baby. I'm just like, I'm flowing with the market here. I'm not trying to force a trade. I'm waiting for the trades to kind of come to me. And for me, P&G is a great setup right now. Fantastic company. I mean, who doesn't have a P&G products in their house, right? And it's a blue chip, right? So I really, really like it, and a great dividend in case I ever do get assigned. And it's been getting absolutely hammered here, right? So with the blue chips right here, right, these premiums aren't the best. We all know that. You ain't getting no 3-4% on a Procter and Gamble, right? So for these, my play is usually playing closer to the money, especially when we're in a position like this, meaning like 150s, maybe 145s. Probably not going to get the 145s on this anywhere because, I mean, I don't even know the last time. Let's see when, man, PG's hasn't been at 145 in an extremely long time, man. It's been when is the last time it's actually even been around those levels, man? What, 2023? Man, that's crazy, right? So again, with these kind, you just got to play closer to money. Yeah, it's a higher chance of assignment for sure, but it's Procter & Gamble. It's a lot more of a, I would say reliable, diversified stock compared to others. So guys, that is it for today's video. If you enjoyed this, make sure to like, if I'll drop your comment down below. You're going to get my early retirement strategy guide, and please hit the like and follow button. I want to let everybody know in our community that I plan to actually have my broker statements now on my website, nice and officially. I want to be fully transparent. I want to build a real community of like-minded people here, guys. I think you know that, like whether it's our Facebook group, whether if it's in our private groups, I don't care. I want us all succeeding with this thing and all actually having like reasonable expectations. We don't want these people in here that think this strategy is gonna 10x ROAS that or return on their investment in like a month, right? That's just not the reality of this strategy. The reality of the strategy and the beauty of this is, yes, you can use it as an income play during retirement, absolutely, but you can also build a great foundation and make compounding work a lot faster for you guys. I hope you have a great rest of your day. Remember, sell options, collect premiums. Repeat. I'll see y'all tomorrow.